Let's also welcome on the show Mr. Krishnan V R, who's the Chief of Quantitative Research team at Marcellus, joining us on the show right now. Hi, very good morning and welcome on to the show, Mr. Krishnan. Thank you so much for your time. Firstly, help us with your outlook on the markets because seems like that the markets have seemed to be climbing the wall of worry, especially with respect to the tariff tantrum and the slower growth that was anticipated earlier. But from here on, how do you see the Indian markets performing and where is the tilt? Still with the large caps, or do you believe that now is the time wherein the SMIDs are also offering some opportunity?
Sure. Thank you for having me. Good afternoon to you. So look, I mean, in terms of the 4Q earnings season, we looked at the earnings performance of companies, and roughly when you look at the earnings growth of Nifty 50 companies, it's been in mid-single digits, right, in 4Q. And bulk of the earnings outperformance seems to have come from banks and downstream oil marketing companies. And if you remove these two sectors, broadly earnings growth has kind of just met expectations, right? I won't go to sector specific commentary. I think we can discuss it in detail. But coming to valuations, right? Again, one of again, what I would say is, when you look at aggregate indices, whether it's mid and small cap indices, when you look at the aggregate valuation, right? Again, Indian small and mid cap indices are definitely trading above long-term averages, right? I'm sure your viewers would be aware of that. And valuations are high, not only with respect to their own history, but also when you compare it, versus large caps, or when you compare it with, mid and small cap indices in other emerging markets, right? Which have similar growth outlook, you might argue, right? And even if you look at things like, for example, the 1 year forward price to earning, or a valuation ratio for an average stock, right, within BSE 500. Today's, at least per our calculation today, this number is somewhere around 33 times, right, which is again higher than historical standards, right, which gives you an idea on the extent of the breadth of the extended valuation across stocks, right? So when you look at the recent rally, when you put this, the recent rally which you have seen the last 1 or 2 months, right, within mid and small cap indices, and when you put it in the backdrop of these extended valuation, so one maybe one comment you could make is, maybe the market is expecting some improvement in earnings growth, in for FY26, FY27, backed by an improving macro. But at least according to me, when I look at these valuation, it suggests to me that some of these worries, the wall of worry which you said, right, or some of the uncertainties, for example, the uncertainty around the tariff negotiations which are ongoing with US, those have not, the uncertainty regarding that is not being completely been priced in, and right, and there are also other structural issues which we are aware of. For example, the low wage growth in India, which is obviously impacting urban consumption as we know it, right? So again, to me at least, when I look at the growth outlook and also some of these uncertainties, and when I put this together with against a backdrop of extended valuation, obviously, it's a worry.
Okay. Hi, Krishnan. This is Kanishka also joining in. I want to understand, given the current volatility that we have been seeing on the back of global trends, help us with some factors that we should be steering clear of, and how do you navigate this kind of a market?
Yeah. So, look, I mean, obviously, this is, every market is different, right? And, you can obviously look at some, points in history, but history seldom repeats, but it often rhymes, right? So, given the uncertainty, I would, strongly suggest that investors again focus on, bottoms up, story right? And even when, when I talked about the mid and small cap valuations, remember that mid and small cap stocks, or the mid and small cap space in India is a very wide space, right? So this all the stocks excluding the top 100 stocks, for example, right? And each stock, obviously, there could be, in some cases there are very long growth runways, and obviously valuation should be seen in context of both profitability and valuation, right? So, and when you look at, so again, look at bottoms up stories, stock specific, as much as possible, and at the same time focus on growth, right? Because I think we are at this point in the cycle where growth is going to become, when I say growth, earnings growth is going to become more and more scarce, right? And when growth becomes scarce, the companies which can, deliver growth, right, in whatever ways, right? It could be certainty of growth, it could be, the longevity of the growth, they become that much more valuable, right? So even when you look at a valuation, so there's lesser risk of, the lesser valuation risk for a company which can deliver earnings growth over the next 2-3 years, or even in the medium term. So I think one strategy could be to just focus on companies in a very bottoms up way, on those which can deliver the outstanding earnings growth.
All right, well, Mr. Krishnan, in your quant research, you wish to highlight some sectors which actually tick box many of those check boxes. Give us some sense that in this market construct, since people are finding it a little hard to find new ideas, given the market correction and the tepidness, if you can help us highlight some of the sectors that are looking good, or rather building on to some bit of a momentum. I know that we can't talk stocks, but sectorally, where are you finding some tilt, if you can give us some sense there?
Sure. So look, we like the financial services as such, right? And even because, again, it's financial services is not just lending, right? It's not just banks, NBFCs. Obviously, there's wealth management, RTAs, and insurance, such a wide space. And when you look at the wider financial services in India, whether it's insurance, life insurance, RTAs, wealth management, etc., those, again, they have, very long growth runways. Some of, stocks within these sectors, they are, secular growth stories. And even when you look at, things like momentum, etc., right, they, the earnings growth momentum has been pretty good. Estimates, etc., have been revised upwards, over the last 2-3 years. So, I think from a, when you look at it, both from a, top-down perspective and even from a bottoms-up perspective, I think the broader financial services is definitely attractive. But apart from that, look, I mean, our investing style, because it's sector agnostic, right? We are looking at clean, well-governed companies with low debt, with return on capital above cost of capital, right? So that tends to be our criteria, and you can find such companies, in many sectors, right? So we don't tend to be very top down, or take sector specific calls, but yeah, the financial services, the broader financial services is definitely looks attractive.
Okay. Krishnan, I also want to take your view on the earnings that we saw. Now, Q4 is almost over. Most of the Q4 earnings are out, and like you have mentioned, FY26 and 27 is when we can start seeing improvement. But if you could help us understand, when exactly in FY26 do you see improvement coming in? Could it be the next quarter, like the Q2, or in the second half of the year? And also, do you think conditions like the early onset of monsoon that we just saw, that could impact earnings in FY26?
Yeah, so in terms of the earnings growth, look, I mean, I think the consensus is for, baking in close to a mid to high single digit, high teens earnings growth for Nifty, right? And this is over FY26 and FY27. And, coming to your question on, how this, might pan out. So I think, there are, at least for us, we see there could be, two, likely triggers for upgrades, right, if at all. One could be, for example, the lower crude oil prices, right? India is a net importer of crude. A lot of us, companies, when you look at their cost of goods or the cost of raw materials, that has that's linked to crude oil prices one way or the other. So yeah, that could be some benefit on the margin if the crude oil prices stay where they are or even go lower. And the other trigger for upgrade could be if we see some green shoots in urban demand, and that could in my view that could be in the second half of the year, right? If at all. Because we've just seen inflation that's come down. It's now, if you exclude commodities or gold, etc., it's down even below 4% now, the core CPI. So with inflation easing and also the lower personal tax outgo, remember, right, under the new tax regime, that could also be something that could give a fillip to urban demand. And of course we already know that rural demand has fared much better in the last earnings season in 4Q versus urban. And if there's an early onset of monsoon, then it helps rural demand also to that extent, right? So yeah, I mean, I think we might see a bigger impact on the company's earning if all these factors play out in the second half rather than the first half.
All right, we'll watch out for that. But Mr. Krishnan, with this, we'll let you go on that. Thank you so much for taking the time out and speaking with us. It was a pleasure speaking with you.
Thank you. Thanks a lot.
If you like this video, then like, share and subscribe to ET Now.